Hey, how y'all doing? So this is the second video that I'm dropping today for you guys. The first one was over futures. If you haven't watched that, I highly recommend you watch that video that I put out earlier. Even if you don't trade futures, even if you're strictly a Forex trader, I highly recommend you watch that video that I made on ES as well. Because remember guys, price is price. It's the same signatures that you have in one market, you have in another. It's really the same exact signatures, the same exact stuff. Okay, so just because it's futures and you're a Forex trader, don't automatically ignore the video. Go watch it, get that knowledge in. It's useful, I promise, right? So now we're gonna go over some of the Forex pairs that I posted this morning. No trades for me today, but we're still gonna break these down and we're gonna go over them. So CHFJPY, this is the first one that I plugged in chat. I said bias is bullish, meaning that I'm bullish on the play, and my higher time frame is bullish, daily chart bullish. We have a 4-hour bullish OB that stands for order block, and the 1 hour chart we have our fair value gap confirmation as well as a 1-hour bullish order block. I would like to see price trade lower down into that lower imbalance and test that institutional price level, then resume higher. Okay, so we're gonna go into all that. Like, what imbalance am I referring to? What do I mean when I say institutional price level? What does all this mean? What does order block mean, right? So let's go to the charts. Let's go to a 4-hour first. All right, these are just day dividers right here. These those orange lines, those are just day dividers. So here's that 4-hour bullish order block. Both these candles, you see you got two down close candles right here. Both of those they make up one order block, okay? So that is your bullish order block. That's your higher time frame level. Now, you can see I have the very beginning of it marked with a horizontal blue line, right? Now, that does not mean I think it's going to turn here on a dime and go higher. That is not what I'm saying. I'm just indicating that that is the beginning of that 4-hour bullish order block. I figured it was going to trade lower, which is why I said I would like to see price trade lower, down into that lower imbalance, test that institutional price level. That's what I said, as you can see right there. And where's that at? Well, that's farther down. So if we go to the 1-hour chart real quickly, you can see on that 1-hour chart, we have our imbalance right here. Okay. That is what? That is our draw on liquidity. That's our draw on liquidity. And we had our institutional price level down there. When I said institutional price level, what am I referring to? What I'm referring to is the 20 level. Remember, I went over this in my support and resistance series. If you haven't watched that, that is a must. You need to watch that series. Well, really, you need to watch every single series on the YouTube. It's all useful, but I go over institutional price levels in my support resistance series. Okay, so when we're dealing with Forex, the institutional price levels, aka levels of support that you need to be aware of, are the 0, the 20, the 50, and the 80. All right, so like for example, look at I want you to follow my cursor real quick. See right here? That's a 0 level. See right here? That's a 20 level. See right here? That's a 50 level, and that's an 80 level. Okay, those are levels of support and resistance. Most of your major market reversals will be off of these key institutional price levels. And a lot of times whenever you get a reversal that is not off of one of these price levels, it's usually a stop run. It's usually a fake run. Okay, very important one for the notes, right? So that's why I said I wanted to see this come down into that 20 level. Not only is that a key institutional price level, but it's also inside of that fair value gap imbalance. That's why I figured it was not going to turn on a dime right here. Okay. Oh, and also one more thing that's important to note with this CHFJPY. Did we have a Judas swing this morning? Did we have a key liquidity run this morning? Okay. If you remember on the video I made about Judas swings, ICT Judas swing, power of 3, one of the most common times that you'll see this Judas swing take place is right after midnight New York. That's where you'll typically see that Judas swing. It's one of the most common times, right? You might see this little move right here and think, yeah, we got a Judas swing, right? Look at that little move lower. we did get a move lower and it did tap down into this imbalance, but was there really a major liquidity grab on that move lower? Like, what liquidity did we grab here? Like, that Judas swing, it's best if it takes previous session liquidity. Okay, so when we're coming into like what's before London session, because that's where this was. This pullback right here was during London session. What's before London session? Asian session. Where's the Asian session low at? Right here. See those lows right there? Those equal lows right there? That is the low of Asian session, and then low of day, which was formed during New York session. That's a key liquidity pool as well. So these lows were during Asian session. Price did not take out previous session's lows on that liquidity run. That is ideal. That is best. That's what we like to see. Okay. So since we did not have that Judas swing that I liked at the bell, what happened? We just basically we ripped off from the jump really strong, a lot of momentum, and it took out a key liquidity pull to the upside. This is key. Pay close attention. We took out this liquidity pull to the upside. That was that major liquidity pull that we took out right there. And I want you to think of it like this. Price moves in the direction of least resistance. Price is always looking for that next key liquidity pull all the time, seeking liquidity, seeking liquidity, seeking liquidity. Boom, we take out that one, where's the next? Take out that one, where's the next? We took out that liquidity, right? Now it's looking for that next key liquidity pull. So we trade lower, and it tests that level. Is it just going to turn on the dime? It took out that key liquidity pull. Is it just going to come down here, turn on that on the dime? No, where's the next key liquidity pull? Low of day, the low of London session, okay? Because remember, at this point, we're coming into New York session, coming down into this level into New York. London lows is a key liquidity pull, low of day. That's where we're going to seek that liquidity. Boom, it takes that liquidity out of the marketplace, and now we're cooking. Now we're cooking, and now we're in a bullish zone here because we took that key liquidity pull, we rebalanced that price action, we're bouncing off an institutional price level, we're bouncing off a 1 hour bullish order block, and it's within that 4 hour bullish order block. Okay, just because it's violated the beginning of that order block does not invalidate it. That is just indicating the beginning of the order block. I'm not saying that's where it's going to bounce on the dime. I'm not saying that at all. Okay, you got to also pay attention to other time frames, because if you were to just look at the 1 hour chart, you can see we got a drawn liquidity down here. We have another order block down here inside of the 4 hour order block. Remember, price is fractal. Okay, you would know that this is that next key liquidity pull to get taken. It took it. So you got to have all these pieces put together. Okay. Again, think of it, as I said in the previous video, think of it like a puzzle, right? Think of it like a puzzle. You need all these different pieces and it all makes one big picture. So I didn't hit it. Okay. You might be thinking, well, it came down into right here. Isn't that a setup? Well, I guess this is kind of like my experience talking here. The fact that if we were to go like, let's go to the 15-minute, it'll be a little bit easier to explain it here. So 15-minute market structure, when it was coming down into my level, it was bearish. Okay, because why do I say it's bearish? We're consistently putting in lower highs. We're consistently tagging these lows down into this level, and it's a bit late in the morning for my entry. It's within a kill zone for me, but it's late within that kill zone, right? So it's late within that kill zone. The 15-minute market structure is bearish. Okay, we have this key liquidity. Where's the next key liquidity pull now? 5 day up here. That's that next key liquidity pull. So this, you could risk that low. You could risk these lows, depending on how you want to do it. That is a setup, actually. That's a setup. You could risk that low. You could risk that low and then look for the tag these highs. But at the point that I'm making this video, I mean, it's past New York close, and I knew that was likely going to be something that was going to occur. Meaning, I figured I didn't want to hold this overnight. I didn't want to hold it into New York close, have the spread open up on me and get screwed like has happened to me in the past. I don't want to do that. So, I mean, kind of using some common sense here, I figured it's late in the New York kill zone. It's likely not going to reach that objective that I want. Okay. Even though, like I always say, play the structure, which is true, play the market structure, but really it's not the best risk reward either. So not the best risk reward. It's good. It's okay. It's good enough for a trade, but not the best risk reward. 15-minute market structure bearish coming down into the end of New York session. Next key liquidity pool is up here. It's not even a major currency pair, meaning the spread could get me coming into New York close. So I have all these different things, and yeah, it wasn't worth it. It wasn't worth taking the trade. So I just kind of had to use some, use some common sense on it. It just wasn't worth it. But right now at the moment, I am still bullish on it. Okay, because that was the area that I wanted to see it hit, as I indicated in the Discord. That's where I said I would like to see it draw down into that lower imbalance. That's that lower imbalance on the 1 hour. Now it's just on a 15-minute, but let's go back to the 1 hour. There's a lower imbalance, and test the institutional price level like we just talked about, 20. We've done it. That's checks off the list. So now we're good. So now I am bullish at the moment from what price is currently telling me. But yeah, that was the thought process on it. All right, so GBP and CD. Let's go to this one real quick. The GBP and CD. I said bias is bullish. 4 hour OB, aka order block, fair value gap confirmation. And on the right, I have posted a 1 hour chart right here on the right with a 1 hour level of support noted. Let's go to that now. 4 hour. So you can see we had this big, strong explosive move higher, right? And you can see right here on the 4 hour chart what I have noted. If you look at my cursor and where it's moving, that is your order block. Okay, that was the beginning of these series of down close candles right here. That's where it originated at. Again, remember what I just said on the previous pair that we went over. I'm not anticipating that price is going to turn here on the dime. I don't think it's going to do that. I think it's going to dig deeper, but that doesn't invalidate that. That's still one order block. Okay, now on the 1 hour, that level that I was referring to, that level of support on the 1 hour is this owed high inside of the fair value gap. We actually have another one right here, but I forgot to mark. But we have these owed highs in here, which is also going to serve as support. So it's likely going to want to come down and tag those levels. We even have an institutional price level right here, 20, that would completely rebalance that price action. And clearly we didn't get a move down into that level today. But this is another example of a counter trend trade that you could take part in if that's your thing. Because coming into New York, we were all the way up here. So right away, you're probably not going to get your entry. I kind of knew that. We're probably not going to get a pullback within the kill zone. But say, for example, you wanted to counter trend trade this. You say, hey, there's money in this. Okay? There's money in this. Because there is, even though the easy money is being patient and waiting on that higher time frame trend, higher time frame levels. I'm not saying there's not money in counter trend trading and just playing that where's the next draw on liquidity, basically is what it is. Where's the next draw on liquidity? And you can play it within these premium and discount ranges. But see, it takes out this high right here. That's your key liquidity pool. See that? We had this. This is where price opened. So let's start from the jump. This is where price opened up at. Did we have a Judas swing to the downside? Did we take out any key liquidity pool? We might have just barely got below it, but that's not a sweep of that level. What basically happened was right off the jump, boom, you get a nice explosive move to the upside. It clears out yesterday's highs, clears out these highs, clears out these highs. I mean, we're taking out all this buy side liquidity. We purge all that liquidity out of the marketplace. Really strong move, just taking that liquidity out. Now, this is bullish. This is 100% bullish. But what did we enter when we took out these highs? When we took out these highs up here? What are we in at that point? We're in a premium marketplace, meaning short-term expensive. Bullish overall, but short-term expensive. And if you're counter trend trading, you need to know whether you are in a discount and premium marketplace. You need to know where that next draw on liquidity is, okay? So we took out this key liquidity pool right here, and then we chopped around, and now we're starting to break down. So how do you think you would counter trend trade this? Well, after you saw it take out that key liquidity pool, and actually let's mark that so it's a little bit cleaner. Let's just put a horizontal line. So we came up, we took out that big liquidity pool. And I want you to remember, this is straight out of ICT 2022 mentorship. I mean, it's the pattern, the same pattern that he's went over. So you see how it came into New York session. We had this last run up right here, this last run up, taking out these buys. Well, actually, we have relative equal highs here, which isn't ideal if you're shorting. But we came up, we took out that liquidity, and then look at what happened. Boom, look at that nice big displacement lower. Really big, meaty red candle, right? And see how it broke these lows? That's a shift in market structure. There's your fair value gap confirmation after taking that key liquidity pool. See that? There's your fair value gap. Price then does what? It retraces Now, I don't know if it gave us a premium or not. I think it did by first glance. Let's just make sure. Oh yeah, definitely easy, easy. So it gave us that premium. So it meaning it trades above 50% equilibrium of the price range into that fair value gap. That's a setup. That's a counter trend setup. Okay. Because remember, we took out all this liquidity right here, and then we had a shift in market structure while price is in a premium marketplace. That's important. That's very important. Price is in a premium marketplace up here. I mean, we get a displacement after grabbing a key liquidity pool. And your job next, what do you think your job is next? After it trades back up into a short-term premium and to your fair value gap, you get your entry. Where's your stop going to be? You have two options. You could be above the fair value gap high. Right here, look at my cursor. That is a valid stop out point. Or play it a little bit safer, maybe account for the spread. Just play it safe. Put it above these highs right here. Again, it's relative equal highs. I know I'm not a fan of that, but you had nice displacement here lower. Okay, that's a setup still. That's how you could have, that's where your entry could have been once it tapped into that fair value gap. Okay, where's your profit target going to be now? Well, is it smart to like hold all the way down here into these lows and look for it to clean out all this? No, not really. I mean, you can be aggressive. And so basically what I'm getting at is you need to pay yourself. This is overall bullish, remember. Our time frame trend on this is bullish. So really it's not wise to hold for these lows down here. It could do it, but you got a lot of support in here. Okay, you got to remember this is a discount marketplace down here. So you really don't want to be holding counter trend trading all the way down there. You want to trade these premium and discount ranges. That's it. You got to be very conservative. So go to your 1 hour chart. Look what we got right here. What is that? We all know what that is, right? That is a 1 hour bullish fair value gap. Okay. And when price is not tapped into a fair value gap, what does it serve as? It serves as a draw on liquidity. This price action, this portion of price was not efficiently delivered. It is an imbalance. Price does not like to leave portions of price like that. It wants to rebalance that price action. It's going to draw down into that imbalance, right? And it's also, so that's a good PT, basically. That's a good PT. As soon as it draws down into this imbalance right here, maybe you could be a little bit more aggressive and hold out for 80, because remember, major market reversal points, they typically happen around institutional price levels. You could do that. Okay, but also let's see where 50% is, because that's important as well. Right smack here. So right on that order block, right on that 4 hour order block is 50% equilibrium. It's likely going to want to draw down to that at the very least. Okay, now price doesn't have to do anything. Notice I said very likely. That's more than likely that's what's going to happen. So there is 50% equilibrium. There is the beginning of that 4 hour bullish order block, and it's also inside of a fair value gap imbalance. That's likely where we're headed. Okay, and that's how you counter trend trade. Because look at all this stuff. Even though it's a counter trend trade, you're fighting the overall trend. Remember, price moves in the direction of least resistance. We took out all this resistance, all this liquidity out of the marketplace. We move up into a premium marketplace, short-term expensive. Price typically isn't just going to rip. Sure, it can, but likely it's going to want to pull back. It's going to want to rebalance previous imbalances. We get a shift in market structure. Okay, that's why you utilize your smaller time frames. Once price is in a premium like this, utilize a smaller time frame. Find that shift. There it is. Get short. Get your position in, and then identify the next liquidity pool. Identify that next imbalance to take it down into. Because let's see, even though it's a counter trend trade, let's see the risk reward on something like this. Because from first glance, it looks quite attractive from a risk reward standpoint. So let's say you got in as soon as it came up into this imbalance, right? And let's say you risk the fair value gap high, since we've already established it's a valid PT. Let's see. So if you were to just go with the beginning of the fair value gap imbalance, that's over 2 to 1. See right there? That's what you're risking. That's what you're gaining. That's over 2 to 1 right there. Now let's say you wanted to hold a little bit more, be more aggressive, which is still a good PT. It's very valid. It's likely going to trade down lower. That's over 3 to 1 right there. Look at that. See that? You have your order block down here. You have that imbalance, you have the institutional price level. It's likely going to give it to you, and that's 3-to-1 risk reward. Now you might be thinking, okay, Mike, well, these setups, they're falling through quite well. I'm seeing these setups fall through. Why don't you hit them, these counter trend trade setups? Well, as I've said before, the easiest money is in, I firmly believe, because of what my data tells me in the past, the easiest money is in following the higher time frame trend, and it allows you to not be as perfect. Okay, you can be not as precise and do well trading with the higher time frame trend. I know I have a lot of beginners that follow me, and that's where I want you to start. If you're a beginner, start with having everything in conjunction, and then maybe once you get more advanced, you know what you're doing, you have a firm understanding of premium, discount, liquidity, key liquidity pools, imbalances, then maybe venture into other styles of trading, like counter trend trading, like this, for example. But the easiest money, without a doubt, with when you have the higher time frame trend backing you. Okay, but yeah, that's a setup, and as you can see, I mean, 3-to-1 risk reward. That's great. 3-to-1 risk reward. You can be, I mean, you could be wrong over half the time with a 3-to-1 risk reward and be profitable. You could be wrong over half the time and be profitable. That's great, right? So that's GBP NCD. AUD NCD. This one was just a daily chart level that I noticed. So I noted this. Let's zoom in. That's a bullish order block. Okay, see where I have the horizontal line noting the body of it. Again, why do I note the body? Because that's where the bulk of the volume is. That's where the typically will be respected the most. So that's the level that you want to keep an eye on at AUD NCD. So USD JPY said recently had a strong shift on the 4-hour right here. See my cursor. So that is bearish, but short term is bullish, and think price will want to trade up into that fair value gap here soon. Why? Because that area was not efficiently delivered, like we just talked about a second ago. Price does not like to leave an area like that. It will likely want to rebalance it, and once it does, we can see this crumble and trade lower. That was USD JPY, and see I indicated that I think this thing's going to trade up into that imbalance. All right, so USD JPY, this is what I was talking about. So you see, we had this big displacement here on the 4-hour chart, our higher time frame chart. Remember, for me, 4-hour and up, higher time frame chart, right? So you can see we had this push up right here. I want you to follow my cursor. Push up, push up, push up, takes liquidity, Boom, shift in market structure. High probability shift in market structure. Why is this a high probability shift in market structure? Well, fair value gap, confirmation. But we also had a very strong close below that level as well. Strong candle close below that level. Then price does what? Price trades up into a premium marketplace above 50% equilibrium of that price range. Again, plug your Fibonacci from that high to that low, above 50%, taps into that imbalance, efficiently delivers a portion of it, boom, sells off, right? So that is why I figured, or why I posted, that's why I said this morning, short term, I'm bullish. And I think price will want to trade up into that fair value gap here soon. Okay. And that's where I indicated with this picture. See that? Where I indicated I think it's going to pop up into that. That was our imbalance. That 4-hour bearish imbalance, our draw on liquidity. And we tapped into this right here. You look at that. That is our 15-minute bullish imbalance, right? So we had a bullish imbalance here on the 15-minute chart. See that? We tapped into that imbalance, and then boom. That's why I thought we were going to get that move up right there, okay? The drop into that imbalance. And then once it does, we could see this crumble and trade lower. And what do you know? That's exactly what happened. The thing just got destroyed. I don't have a crystal ball. I didn't think it was going to get destroyed that much, but that's what happened. And it's mainly because like we had news come out. So news came out and this thing just got demolished after that. But I don't get them all right. Okay, I don't get every trade right. I'm not acting like I do. So we're gonna go over one of the losing trades, or not really a losing trade since I didn't take it, but my analysis was incorrect on it, and that's Euro USD. Because I know on the age of social media, it seems like nobody gets anything wrong. Everybody's right all the time. Their analysis is perfect. They hit it by the pip every single trade. That's not the case. So this is one that I read wrong. I mean, overall, I was bullish on it. Higher time frame trend was bullish on it, but I figured we might get a little reversal here this morning. That's where I was leaning on Euro USD. So Euro USD, here's what I said originally. Euro USD still very strong, very bullish. Here's the 1 hour level of support to note. See that? I have a horizontal blue line noted with that level of support. That's an old high inside of a fair value gap. Again, watch my series on support or resistance. You'll know that that is a level of support. And I said another old high right below that with your bullish order block. So we're going to note these, or actually I already have them noted. There's that first level, okay? And then there is that, let's go to the 1 hour chart real quick. There's an old high, and there's your bullish order block. So we found support off that bullish order block. That was where we found our bottom, okay? Then we had our 0 institutional light, or our 0 institutional price level right there as well. So we found support right there. Now, why do I think this thing was going to roll over? Because if we scroll down a little bit, I said, so your USD moving higher at the moment off that 1 hour bullish order block, which we just pointed out. And there it is displayed on that chart in a 15-minute. But I'll be careful with longs. We are trading up into a bearish imbalance at the moment. That was created on the displacement after grabbing previous day's highs, which is a key liquidity pool. Higher time frame trend, still bullish overall. But this may get slammed lower here off this fair value gap. That's what I had. That's what I thought was going to play out here. Okay. All right, I'm not going to sit here and pretend like I knew this was going to happen. I knew this was going to spike up. I knew we were bouncing off some support. I mean, that's a bullish order block. I did know the higher time frame trend was bullish. But what I saw happening this morning was we took this liquidity, previous day's highs. We were already overextended, like on this move higher in a premium marketplace on the higher time frame. We're in a premium on the higher time frame. And I saw this move, this displacement on the 30-minute and 15-minute. We see we broke the swing low level, had the displacement, and this was before the news. Price came up into that level, was testing it. I figured it was going to roll over. Okay. We had that bounce off that, but I thought that was going to be short-lived. Okay, because I thought this thing was going to roll over. And what do you know, 10 o'clock news dropped at 10 o'clock, and boom, this thing just completely demolished high of day. Took out those buy stops. And yep, that was the end of it. But yeah, that's how I read Euro USD. I'm going to go over one more because this was another good counter trend trade. All right, so right here, see this? NCD CHF, this would be a counter trend trade setup, but short term it is bearish, and we will likely draw down lower into that 4 hour bullish order block. Right now, pushing up into a 15-minute level, typo of resistance, and bearish right here as well. Okay, so this is NCD CHF. Now that 2-to-1 RR stands for risk reward. So like 2-to-1, for example, would be like you risk $100 to make $200. So good risk reward. And then I have that risk reward tool plotted right there for you. And then those are your levels of resistance, being an O low inside of the fair value gap and your bearish order block. And you can see this thing just completely just worked out perfectly. Again, this was another counter trend trade because overall this thing is bullish. But what made me think that this thing was going to crumble? So again, we had this order block right here. See that? I know it kind of a little bit messy since I got day dividers in, but if you look at that horizontal blue line right here on the body of this big red candle, that is that 4 hour bullish order block. And also note that you have a fair value gap right there. I'm going to note that as well because that is our draw on liquidity. Okay. That is a draw on liquidity. And we're also going to take Fibonacci from this low to that high. Right there is your Fibonacci. Right inside of that imbalance is where you'd be coming down into below 50% equilibrium. So a discount. So overall bullish, but I knew we came up on this move up right here. We took out these highs, We had a draw on liquidity. We had a bullish order block. That's a draw as well. And now what do we do next? We go to our lower time frame. Just like we did a second ago. I can't remember what pair it was on. But just like we did a second ago in that counter trend trade example, you utilize that smaller time frame when price is in a premium marketplace for this case, when we're shorting, it'll just be the opposite if you're looking for buying scenarios. But in this case, we're shorting. So in a premium marketplace, you look for that shift in market structure. So originally we had this move up higher right here, which it wasn't a very big run of previous day's highs, just barely tapped above it. Then right after tapping above previous day's highs, we had that shift. It came up, rebalanced it, sold off again, another displacement to the downside. Price then retraces up, rebalances it, boom, sells off again. And then this is the play that I posted coming into New York, where we rebalanced this price action once more. We tested this level of resistance, aka an old low inside of a fair value gap. When you have that criteria, very sensitive level, bearish order block right here. We traded up into a premium, key Fibonacci retracement, 61%, test those levels, and boom, rolls over, attacks the lows, trades deeper down into that imbalance, tapped into it a second right here, which is why we bounced after cleaning out these lows as well. But then we dug a little bit deeper, traded down into a discount as well, tested that order block. So just beautiful, beautiful risk reward on a play like that as well. Counter trend trade, but really clean setup, really clean movement on it. If you enjoyed this video, make sure you leave a like, subscribe to the channel. I'll catch you later.